Hello, what up my people? Welcome back to my channel once again. So today I'm going to be sharing with you guys my trade recap on gold. Today I'm not going to be sharing a daily recap. I'm going to be sharing my weekly recap combined all together. So for this week I actually took 5 trades and I would like to share those trades with you guys. So join me on my screen so that I can actually show you how I actually caught those 5 trades and irrespective, we actually use both alchemist strategy and SMC strategy together to actually get all these 5 trades. In total, we actually took 7 trades. We lost 2 trades and we actually won 5 trades. So join me on my screen so that I can take you through those trades and let's confirm what we actually saw before we entered those trades. So join me. So welcome back to my screen, guys. Like I said, I was going to be showing you guys my trade recap on gold for one full week. In a full week, we actually took just 5 trades. We took 7 trades. We lost 2 trades, and we actually won 5. And that we're going to be showing you guys the recap of this trade. And this trade starts from March 24th on Monday 2025, and I think I actually dropped a video making it interactive within my community for everybody to drop his or her own objection on the trade as a whole, which I would also be tagging that video in this particular video too, so that we have idea of how we actually got this trade. Hello guys, so I want us to make this analysis an interesting analysis, and I want to hear your view in the comment section. This is gold on the 15 minutes time frame, and today being Sunday, the market is going to start tomorrow. That's Monday. So where do you guys think that this particular POI would actually be valid? Would it be valid on the decisional order block, or it will be valid on the extreme order block? This is my extreme POI and this is my decisional POI. So in the comment section, please write there which POI do you think will be respected. Let's see. So my first trade that would actually be showing you guys is this particular trades. We have 2 trades here. This is number 1 trade, this is the second trade, and now this is my first trade of the week. I started the week with a sweet profit. Firstly, so now what did I actually see on this particular level that made me enter for this trade? Firstly, I have a trend line. I don't only use trend line for my trades. I use multiple confluence before I enter for any trend line. So my first trade, firstly, this is what I saw on the 1 hour, on the 15 minutes time frame. Yes, on the 15 minutes time frame, I saw this demand zone here. Can you see this demand zone? I saw this demand zone, and when I saw the demand zone, what I did was immediately I knew that the market was going to visit this our supply zone here. I knew that the market was going to visit this our supply zone here. So what did I do? I actually marked my demand zone, waited for the market to come into that demand zone before I actually executed. So that is it for the first trade. Let me go to the 5 minutes time frame so that we have an idea of how the trade actually played out. Have an idea of how it played out. Like I said, so this is the first trade. Can you see, even on the 5 minutes we still have a demand zone here. So the moment the market came into my demand zone, confluence with my trend line, I knew that this particular push is what will push it to my point of interest. Now if you look at, this is the first trade. I rallied the trade from this zone to this particular zone. You see, people talk about supply and demand, but supply and demand is still one of the best strategies that I feel it is very obvious that supply and demand still works. Some people don't believe that it still works, but supply and demand still works. So I actually rallied the first trade to this zone. Now the second trade on the 15 minutes time frame, like I said I was going to be dropping a video that I did that made it interactive before this market played out, because I knew that the market was going to respect my decisional order block. So let's go back to 15 minutes time frame so that I can explain this trade very well and why I actually entered the trade as a whole. So now on the 15 minutes time frame, if we look at, we have a demand, we have a supply zone here. Can you see? Because of the table I drew, this is our supply zone here. I knew that this market was going to, the decisional order block was going to be respected. But let's start from the extreme to the decisional order block. So on Monday morning, I had 2 points of interest. This is how I drew them. This is my extreme order block and this is my decisional order block. So what I did was that I was expecting that these 2 points of interest were going to, probably the extreme point of interest was going to be respected. But why I knew that it wasn't going to be respected was that when we are coming on this particular structure here, if we look at the market structure, we notice that we have a market structure shift. And the moment we have a market structure shift, what does it mean? The market has changed direction as a whole. Now we are not in a bullish trend, rather we are in a bearish trend. So I knew that market structure shift, for the market to actually come back into this extreme order block immediately, will be very, very hard. It will be very hard for the market to come into our extreme order block because we had a market structure shift already. So what am I looking at? I am looking at my positional order block. And when the market played out in the morning, can you see? This market came to my point of interest at around 10:30 a.m. And the moment it tapped into my point of interest, as you can see, you will notice that it only actually did not get into the point of interest, but it only tapped into the point of interest to actually not allow to know. It didn't actually trigger a lot of people into the market, and it left with them. Irrespective, my sell limit already was at the tip of this particular order block. I knew that the market must not surely go into my point of interest, and the moment it happened, it actually tapped me in and actually gave me a 4-to-1 reward RR. It gave me a 4-to-1 RR, and that was very good. Now, why did I actually take this trade? I want to break it down. Now, I have 4 rules to my SMC. I always say this thing. I have 4 rules. Now, my first rule is break of structure. When I saw this break of structure, I knew that yes, this order block is our decisional order block. I said, okay, that's fine. Secondly, what do I look at? I look at my inducement. Can you see? This is my inducement. This is the first valid pullback that happened after this particular run out of these cells. Can you see? This particular buy was what created these whole cells. This buy created these whole cells. So when it happened, I knew that this inducement was going to be valid. And if you look at very well, you will see that the moment the market came into this inducement, it reacted. Where did it react to? It reacted to this our demand zone here. It reacted to our demand zone. That was where I took my first trade. Don't forget, I took my first trade here and rallied it to the point of interest. I knew that this market was going to take out this inducement. That's why I actually took this trade to this place. So after the inducement, now I'm talking about the second trade. After taking out the inducement, we have imbalance. That's our second rule. We have imbalance here. Imbalance is our third rule. Imbalance is our third rule, and we have another one, which is our fourth rule. So these are the rules I actually looked at before actually taking this trade. Don't forget, we have liquidity lying below all these markets. We have liquidity lying below this particular market condition. So I knew that this market is going to come to take out this liquidity and start rallying up for that. So that is the second trade. Now let's go to the third trade. How did I actually catch this third trade? Now I will take you guys to the 1 hour time frame. Let's have a clear view of what happened here and you have idea of how I actually got this trade. Now this is the thing, I go to 15 minutes time frame for my entry. I only go to 15 minutes time frame for my entry. For 1 hour time frame is where you will see most of my energy on. I like trading the 1 hour time frame because it gives me better confidence than trading lower time frames. So now on the 1 hour time frame, like I said, after we cut this particular trade, can you see we got 4:1 RR? Yes, this is still on Monday at around 7 p.m. 7 p.m. on that same Monday. Can you see? This particular demand zone was created. This particular demand zone was created. And when I saw this demand zone, I knew that on Tuesday morning, okay, this is even the Asian session. I caught this trade on the Asian session. When I saw this particular demand zone, I knew that yes, this market is going to be respecting this particular demand zone, because what are our confluences most of the time? What is our confluence? Break of structure. I'm going to mark it for you guys so that you see. I intentionally did not mark all these things until I am doing a recap. Break of structure first. Some will mark it from this place, but for me, I like marking it from here because I like making sure that my break of structure is around my impulsive move. So let's say we have a break of structure here. We also have a first pullback that happened. Can you see this pullback? This is our inducement. This is the 1 hour time frame. Don't forget. The first pullback is our inducement. So this is our inducement here. Can you see? After creating that inducement, what happened? This particular candle came, tapped into the inducement, did as if that is what it came to do, started rallying up, still came back again to take people out. And you see, but I knew that this market was going to tap into this particular demand. I knew. So the market tapped in around 2 a.m. That's Asian session. And the moment it tapped in, I saw an impulsive movement. So a nice reaction immediately. After getting that reaction, what happens? I'm going to take this out. This is one order block on the 5 minutes time frame. It's also a decisional order block. But if it is a decisional order block, why it didn't hold is that we did not see any market structure shift or change of character. That's why that order block did not hold. We also did not have a break of structure around the order block, but I knew that particular zone was going to make the market react. That's why I just drew it and left it there. So the market came, tapped into our demand zone, and started giving us impulsive movement. Now, what happened again that made this market to come back to this zone? We also have another demand zone again. We also have another demand zone here. Can you see? It came again, tapped into this demand zone, started rallying up again. So this time, I actually knew that this market was going to respect my order block here. I knew it was going to respect my order block. Now, when did it tap into this particular order block? Look at this is 2 p.m. 2 p.m. It tapped into this particular order block at 2 p.m. 2 p.m. 2 p.m. now we are on New York session already. So these are the session that people want to actually make sure they are trading. So it tapped into this particular zone around 2 p.m. But I knew that the market has already gotten all the reaction it's supposed to get on the first tap. So I knew that this particular tap was not going to give me a good RR. So I decided not to take the trade. I only took the trade from this demand zone here. From this demand zone here. Yes, from this demand zone here to this zone. So that is my third trade. Now, I am also going to be explaining how I actually caught this other trade too, and that will take us to the 15 minutes time frame. Now, this is the thing. A lot of people will tell you that time frames does not really matter, but that is the most important thing. You don't want to stay on one time frame. The moment you stay on one time frame, you're going to be limited to kind of opportunities you're going to see in the market. You're going to be limited, and that way you don't want to be limited. Okay, I think this is on the 30 minutes time frame. I got this on the 30 minutes time frame. Sorry, I just want to be sure so that we are all on the same page. Let's look at the 5 minutes time frame. There is an order block there that I actually saw that made me took that particular trade. Sorry, I'm going to get there. Okay. I was the one that reduced my RR. Okay. So now, this particular trade was for Tuesday. These two trades were for Monday, and this second trade was for Tuesday, and this is for Wednesday. This is trade for Wednesday. So the moment I saw this first demand zone here, can you see? Now this demand zone was created on Wednesday, 4 a.m. Sorry, Asian session. It was created under the Asian session, 4 a.m. Now what did I actually do? I knew that is a valid demand zone. That is a valid demand zone. So what did I do? My buy limit was here already. The buy limit was here already. And what did the market do? Can you see? Came in, immediately tap me into the markets. Can you see? And it started rallying up. This is the 1 hour time frame. Like I said, I will be dropping some proof of how the market started. But irrespective, just want to explain and document my trade for this particular week, and from there we would actually know how profitable every month is. Like I said, these videos are for my journaling, and at the same time other small traders that would want to learn and see the confluences I use and what I actually see before entering any trade. So the Wednesday trade, this is the fourth trade, and I just wanted to be sure of this order block so that I'll explain it on this order block. But let's go to the 15 minutes time frame so that you guys have an idea of what I did and things I actually looked at when I was on the trade, how I actually managed the trades too. Okay, so this is the trade, and you see the moment the market tapped me in, it started moving very fast. It was nice reaction, very nice reaction. So I knew that this market was going to come to this particular supply zone. I knew it was going to come to this supply zone, and the moment it hit my TP, what did I do? I got my fib retracement tool to actually see where this market is going to retrace to. See where the market is going to retrace to. So where am I marking from? I'm marking from the top. That's my swing high, and I'll be marking to this particular swing low. Am I correct? Yes. This is my swing high. This is my swing high here. Sorry, let me use this. This is my swing high here, and this is my swing low here. Can you see? Those are the two confluence that I use. Those are my swing high and my swing low. So as you can see, you will notice that the market reacted to my 0.5 level. That is my fib setting. The market reacted to my what? 0.5 level, and I kept my line of my 0.5 level there. But because of spread, I did not actually bring my entry on that same line. I allowed my entry to be a little bit out of the line so that my spread can actually catch that particular trade. And as you can see, we actually caught a 4:1 RR2. I always tell people on their fib level, when you are using fib level, you want to make sure that you are actually looking at a lower RR, something like 2:1, 3:1 RR. Don't be too greedy around your fib level, but fib level is actually one of the best trading strategy also that you can get funded with, because if you backtest fib level, you will have more confidence taking trades, or like rather I say you have more confidence holding on to trades. So that is how I actually caught this fourth trade, and on Wednesday that's how I actually caught those trades. And also on Wednesday around 2:30, I actually caught this other trade too, and that will be on the 5 minutes time frame. Yeah, this trade did not play out as I wanted, but it actually still went on profit. It went on profit because I was looking at a level here that made me enter this trade, and this is the level here. This is the level I was looking at. Sorry, this other block is not supposed to be respected, but we have a mitigation block here. MB mitigation block. We have a mitigation block here, but I did not draw that mitigation block, and after I actually took profits, after I hit TP here, I deleted this mitigation block. So I don't want to go into mitigation block because I know not really everybody has experience with mitigation block. So let's leave that aside. So we're still going back to the 1 minute time frame, 1 hour time frame, so that we can analyze our last trade that we used mitigation block to get. So this is our 1 hour time frame once again. This is our 1 hour time frame once again. Okay, like I said, when this market actually came back on the 1 hour time frame, as you can see here, you will see that I actually drew equal highs. Yes, these are equal highs. This is very equal. It's an equal high. What did it actually show me? It shows me that this is actually a plus setup also. And if you look at this place, apart from this pure high that we had an inducement. You'll be wondering what am I trying to induce here? Now I use Malaysian SNR, that's support and resistance. Malaysian SNR, I use it to actually catch this particular last trade. Now, how did it actually happen? I actually looked at, if I have equal highs here, I have this particular other block here, but the other block was too obvious that it wasn't going to hold because there is no any other block that would actually hold on to this inducement. But what I actually noticed was a left wing open, a close and open candle. Can you see? Immediate buy and an immediate sell. If you have idea of Malaysian SNR, that way you will know what I'm talking about. But if you have idea, you will know that this particular level is actually the resistance level. It's the resistance level. So what did I actually do? I drew a long line that made me knew that this is a resistance. And what did the market do? This RC means resistance candle. This is my resistance candle. And what did the market do immediately? What did it do? The moment I left my sell limits there too, the moment the market came into, it tapped me in immediately. Can you see? Tapped me in immediately, gave me two consolidation. That's around an hour plus before the market started coming down. Now, when this market is coming down, what was my target? My target was this, my mitigation block. Can you see it? This is my mitigation block. So the moment I saw this mitigation block, I knew that this mitigation block was going to hold on to the market to actually buy more of the market. And what did I actually do? I kept my TP at this particular tip of the mitigation block. And what did the market do? The moment it got to my mitigation block, it respected my mitigation block immediately. Now I had in mind that even if this market did not hold on to this my mitigation block, I have an inducement, I have a liquidity here, and I have another block here. But this my inducement has already tapped into my supply zone. Can you see? It has already tapped into my other block. So I just decided to use my mitigation block, and as you can see, it only respected the mitigation block, and long behold, it started buying again. So that is my trade recap on gold from March 24th, 2025 to Friday, March, we actually caught about 6 trades, but I think we took 8 trades, we lost 2 trades, and we won 6 trades. So thanks for watching my trade recap, and I'm gonna see you on the next one. So I know this is a long video, but let's see how it goes.